Well, good morning, everyone. Welcome to our Tuesday morning trading session. You're going to have to bear with me here a little bit. I had my computer lock up, and so I had to do a quick little restart here. Hopefully everything is going to load correctly, and no, it's not. Oh, there it is. I got lucky. Okay, just bear with me as I throw the trade manager on my charts. We just had the market open. Come on, don't crash. There we go. And we're going to see that the NASDAQ has made a rather, well, I don't want to say serious decline, but a more substantial decline in the overnight. So the London Open right about here, and the market gives us a trend change signal right here. A little bit of a bounce, and down we go. So actually the opposite of what we've been seeing the last few days, where now we've got a slight opening gap above the market. This, of course, is the NASDAQ. It will be the same for the YM or the Russell or the E-mini, for that matter. Now, you know, I'm always hesitant about these trades right out of the gate. About the only tool that I trust for an early trade signal is the Eagle. And our other tools are looking, oh, they were looking a little bit more bullish here for a moment. I think I'd better stick to my guns and, oh, shoot, here the Eagle now generated that sell signal. And I'm a little bit too late to get on board there. I'm trying to do too many things at once, and my wife will be the first to tell you that I don't multitask well. Yeah, we're only about 2 or 3 minutes into the open. I think even if it runs, let her run. Oh, see, now I say that, and here's a first micro-macro cross signal. All right. How about I finish setting up the rest of my charts? That's one way to avoid doing something that I'm going to regret. Crude oil, another market that's made a pretty good decline in the overnight. And I'll bring that over in just a moment for you to see. So here's crude on the Eagle. We got a signal up here. This would have been very difficult to take advantage of on the Eagle because we didn't see a test of the extreme first, right? The market makes one of these very rare V-tops and just tails off lower. Ah, well done, John. John just grabbed 20 ticks on the Raptor here. Yes, Ricardo's hard edge bounce, for those of you who have been reading the DTS and RTS forums, I really like what Ricardo's done. And in fact, I might start implementing some of his ideas with the double cloud. I love that idea. And especially since it's been performing very well. So yeah, hats off to Ricardo for spotting that. The problem we're having is this opening range gap. And the problem with gaps is it's nearly impossible to tell whether the market's going to try to fill the gap off of the open. Here, we can try to trade this move here, and what I'll do, there we go. We'll just throw in a buy order. It's impossible to tell out of the gate whether the market's going to try to fill that gap or whether it's going to be what they call an acceleration gap, where the market actually ends up, we'll take that to the hard edge, the market actually ends up continuing in the direction of the gap. So we've broken this little swing here, this little swing high, and obviously I'm hoping that this market's going to try to fill that gap. That should see it get up here to around the 45.60 area. Somewhere in there, hopefully enough to find our profit objective. Sean asks a good question. He says, Eric, I see that 45.33 on the NASDAQ is a significant support level looking back. Could we be looking for a test of the extreme at these levels? Well, yes, I suppose. And I think what Sean is asking is, would this great big thing here work out to be a test of the extreme? Obviously, it could, but what I try to look for in tests of the extreme, and we're going to use our break-even trigger. What I look for in tests of the extreme is the shift in momentum, right? We're looking to see who currently has control of the market. Now, from a longer term point of view, if you're taking maybe a end of day trade, or if you're looking at the market maybe to hold it a position for the entire session, then yes, that might be the way to look at it. However, since we're looking at shorter term trades, I would be looking at things like this as a test of the extreme and a suggestion that the market might rally, especially given that we've taken out that high. Here's a little bit of a larger one, and only because we didn't get a real retest on the way down. We got an itty bitty test of the extreme here. That I wouldn't really consider that a test of the extreme on the way down. Rather, I would consider this here to be the retest. I would consider this to be the attempt by the buyers to recover the trend and then the subsequent failure. Like I say, just try to remember what the test of the extreme is telling you. It's showing you that the buyers or sellers are trying to recapture the trend. So now we've got a little bit of an uptrend, and we're coming back now to retest this area here. So this is going to be a major decision point for this market. If the buyers control the market, then we're going to see it continue higher, obviously. Now, if this signal fails, and this is why I look for a double pullback in these types of situations. Okay, so now here come the sellers. Now, if the buyers are unable to resume the trend on this double pullback, then the sellers are going to take control and will be able to freely sell this market. Now, if you're a little bit more aggressive, we do have a test of the extreme. You could short it right here if you wanted, right? You could short right now and maybe use like a swing high strategy. Okay, well, that's all right. We got out on our break-even trigger probably because I got in just a little bit late. But you see, these tests of the extreme, they're very, very powerful when you see that, okay, the buyers have taken control off of this retest here, and now they're rallying, and now all of a sudden they fail. There's an opportunity, but look at what happened. The sellers try to take control, but now here come the buyers again. So now the sellers don't have control. You could buy this market on this move higher also. And once again, now if this signal fails and we come back with a sell signal, we could sell this signal. I know it starts to get a little bit confusing, but we're looking to see who currently has control. Well, currently the buyers have control. Did we take a little slip on that or not? Maybe not. And this is starting to get more and more difficult because what happens after about the third swing here is that we end up in a channel. We end up moving sideways where neither side has control. So this may have been a little bit extra aggressive on my part. Micah is asking, Eric, can you explain the gap? If you're referring to this gap right here, that's just a little anomaly on my chart. Oh, I guess I better put a stop in here, shouldn't I? This is just an anomaly when I load my Trailblazer. I don't know why it does it, but it does. I know I've had a few people look at that and say, what's up with that? Okay, now we're close enough to the break-even trigger that if it doesn't hit it, I'm going to force it to break even. So I'm of the opinion if I can get 3/4 of the way to my profit objective and the market turns, then I want out of the trade. Oh, come on, you're just kissing the profit target. There we go. Now this really was the last chance for the buyers right here. If the buyers failed here, like they're doing now, we may end up going sideways. Oh, the overnight gap. Micah's asking, can you explain the overnight gap? Absolutely, Micah. Well, let's see here. So trading left off at, what was yesterday's close? Around 45.66. So trading left off right about here. So here's my 415 mark right here. Okay, now the overnight gap is simply the activity that occurred during the Asian session, which would have begun right about here. The Asian session was a little bit quiet, didn't really make a whole lot of progress one way or the other. And then the London session, the European session opened right about here. And we saw the market tail off a little bit of a recovery bounce, and then down we go again. So it's simply the difference between where the North American market left off and where the North American market opens. So the opening price was right about here. Therefore, for the North American traders, when they see the market open, there's going to be a little bit of a gap like this. And like I say, the thing with these opening range gaps is it's difficult to determine whether this is going to be an acceleration gap and the market is just going to continue lower, or if the North American traders are going to try to fill that gap before settling on whatever direction they're going to settle on. Because remember, yesterday, the NASDAQ was very strong all day. Scrolling back here. Well, yes, it was. So for the entire session yesterday, the NASDAQ made a nice strong rally, and then after hours, where are we? There we go. So had a little bit of a reset, nice strong rally through the end of the day. And then by the end of the session, some of that was recovered. So there's really, unless there was some fundamental news in the overnight, that, maybe Apple burned down or something like that, there was no reason really for the market to continue lower. So the North American traders this time rallied into that gap. And that's where we're at right now. Why the European traders would sell it off in the overnight or sometimes buy it in the overnight, I don't know. Obviously, they're working on fundamentals that they believe maybe the market was overvalued. They've got their reasons. Maybe they're taking a longer term trade. Maybe some of the North American traders are selling off their long positions for profit. Yeah, I know I didn't do a really good job of explaining that, but yeah, that's how you get the gaps in the overnight. The difference between where the North American session left off and where the North American session opened. If you're watching a 24-hour chart, of course, there are no gaps. China devalued its currency by 2%. They're pulling the old peso trick. Although the poor Mexicans all those years ago, they really did a number on their economy. All right, and so far the NQ trade holding its own here to the upside. The buyers still managing to rally, and you can start to see those lines that I drew there for where the market left off. So we've almost recovered the entirety of the gap. In fact, if I wanted to, I could be a little bit more aggressive with my stop now. Maybe go with something like the bar high low. Okay. So a couple of great trades already. John's been knocking it out of the park. Also, he said he had a failed hard edge bounce and another winner. So yes, it is a strange day. And if, I think it was Sean or somebody was asking about the 20-day challenge where we're going to try to post a profitable number for 20 days in a row. I think this is day number 3 or 4 now, and so far so good. This would be my number today. So I was trading 2 contracts on this, so even if you split it in half and did 150 per, or even $100 per contract, that would still be a very, very respectable number. Again, the whole point of the 20-day challenge is to get consistent in your profit taking. Try to concentrate on those high probability targets without setting an unrealistic objective for yourself. Because if you can make $50 a day or $100 a day, there is quite literally no limit to the amount of money that you can earn. It might take you a little while to build up your account to the point where you can trade a large enough volume, but even $100 a day on a single contract over the course of the year, that's an extra $20,000 on one trade, or one trade for $100 or two $50 trades. So a very respectable start to the day. Yeah, absolutely right. John says if you make 5% a day, you'll double your account in a month. And that's just the math, folks. That's no science fiction or hocus pocus or anything like that. That's just the math. The math don't lie, as a trading friend of mine liked to say. The math does not lie. Very lopsided advanced decline. Jim's given me the numbers here. 600 buyers, 2,100 sellers. So that's about a negative 1,500. That's a very bearish start to the day, given especially yesterday was such a strong buying day. And this day also starting off to be a little bit stronger. Yeah, more good advice here from John. Keep a trading journal and review your trades each day. That will help. Absolutely. You guys know I'm a big fan of keeping a trading journal and a big fan of having 2 reasons to take a trade. If you can figure out 2 reasons to take a signal, you're probably going to have a fairly positive result. Like if we were looking at this first micro macro cross right here. Oh, no, I guess it was this one right here. Well, the first reason for taking the trade is obviously that it's a first micro macro cross. That's a no-brainer. Second reason for taking the trade might be a little bit more difficult to come up with, but I could see the breach of this support area as being a positive for taking the trade. The problem is I don't really see a test of the extreme. In hindsight, it might turn out, because this is the hawk, everything happens a little bit faster. This is our scalping tool after all. This may turn out to be the test of the extreme right here. However, when I would set this trade up, I might still be anticipating the market to pull against me, give me a larger test of the extreme Therefore, ideally, I would cover the trade up here. And it would have given me no problem finding the first profit target. And if I had a runner in, I could still be in this trade. So very nice to see the market following through. It's a refreshing change from some of the days we had seen a few weeks ago where everything was stagnating. And it looks like we've traded now down to the primary support, getting a little bit of a bounce. We had our trend change signal back here. We'll see if we come back with a trend line touch or maybe even a late filter entry signal. That could be enticing. But the problem that we're seeing pretty much across the board once again is that where do we have that test of the extreme? Don't really have it. But because the market is in a downtrend, we might be looking at a larger bear flag and a breakout lower. We'll try to keep it simple though. We'll try to keep it simple, stick with the signals, look for that test of the extreme. It's like the baseball analogy I gave you the other day. You know, if you're a home run hitter, you're going to wait for your pitch. You're not swinging at everything. You're either going to wear out the pitcher until he throws a grapefruit over the plate, or you're going to make him earn it. We're near the top of the hour also, so we're just about to set our range for the day, or our opening range, I should say, for the day. We've been noticing too that the NQ has been kind of setting the tone first thing, and then for the rest of the session they've just gone flat. That was yesterday also. Alright, so this was the open or the low. Out of the first hour, here was the high, and we're trading right in the thick of it. All right, well, decision time now. So here we go. We're working on our rule of three type scenario. We've got a bullish band. We've produced three signals against the hard edge. I'm going to let it turn the ATR over. Well, I suppose that would essentially make this the signal bar right here if I entered below the low. I could also enter below this low here. It's a little bit of an odd looking trade. Again, a little bit more aggressive here. But I think by entering below this low, that does add a little bit of protection. And if they trade higher here, it might mean that our test of the extreme has not been tested yet. We're watching this tug-of-war unfold. Note the Falcon actually giving us a buy signal off of this primary support. So really a market that is a little bit confused. A buy signal and a late filter entry. How many ticks do I got to give up to get above the high? 1, 2, 3, 4, 5, 6. Ooh, I'm only running a 10-tick target. All right, what I'll do, I'll dial down the risk amount. We'll enter here, we'll exit down here, and whichever side fills first, that's the side we'll take. So we've got the eagle looking bearish, we've got the hawk totally neutral, the raptor looking bearish, because we're working on a double pullback into the hard edge, so the raptor's actually looking like it's going to sell off. So there's our raptor signal actually. Oops, wow, too late to punch into that one. But we did catch it here on the eagle, so I'm going to scrub the buy order there. Come on down. Come on. Oh, just kissed the break-even target. All right, well, I'm not going to panic just yet, but we're getting back to these areas where the sellers were getting a little bit, or pardon me, the buyers were getting a little bit more active. So there's some buying support right here. Let's see if the sellers can knock them down. Jim says the Russell made a new low. And John's knocking it out of the park with the hard edge bounces off of the Raptor. Yeah, there was a nice little double pullback here and came out with the signal and a quick little move lower. Come on, sellers. Now we're getting a retest, actually. So we've broken down. We're looking at the market retesting and looking for this phase now. Looking for the sellers to recover the market. Well, here's, I never considered this. Tony mentions regarding gaps, an opinion on gaps. He says a pro gap is a gap in the opposite direction of the trend. A naive gap or novice gap is in the gap in the same direction of the trend. So they've already got little handles for all the gaps. Oh, don't you guys dare swing it here. So I'm not liking the fact that the buyers are recovering it here a little bit. Really need to see the sellers step up now, force it lower. If we can get this bar, okay, if we can get this bar to close low, I'm going to become a lot more aggressive with my stop. In fact, here I'm going to show you something about running or holding your stop, looking for that reaction. So this would have been our initial stop. This is why I want to initially keep my stop back as far as possible. Now there's nothing to say, of course, the market won't hit my stop here also. But as a rule, the further back I can keep my stop initially, like let's say I even keep my stop up here, the more management options I give myself. And what I'm looking for now is I'm looking for the sellers to recover their attempt to move the market lower. I know where the buyers have stepped in. They've stepped in right here. Now I need the sellers to show me that they're serious about pushing the market lower, because the sellers made their effort right here. Right? They took out the buyers here. They took out the buyers here. Are they serious or are they not? If they are serious, they're going to swing the market one more time, and then that will be my cue to go in, maybe above their highs with a bar high-low strategy. The point is, if the sellers force the market lower here, come on, there we go. Okay, so they force the market lower. You can either take this initial bar or you can wait for one more bar. The choice is yours. But the point is, if they fail now, if this market reverses again and heads higher, it's probably a sign that the sellers do not have control of the market, and therefore it's probably a good idea to leave. Okay, so 2 bars in our favor. Definitely time to bring the stops down here. If the sellers cannot hold on to their direction now, then that means the buyers are stronger. They're going to rally. We may as well take our loss early, minimize it the best we can. we need to flip this ATR over now. So 45.43, a very important number for us. Oh, Mark. Boy, you guys are doing great. Mark says, another positive day on the Eagle. Took the red bar buy and the green bar sell, each with 2 contracts, all in, all out. Wasn't sure on the red bar buy since the market bias looked down, but with the gap, I chanced it anyway. So Mark took this red bar buy here. Well done. And I'm thinking this was the green bar sell that he's talking about, right about here. This rule of 3 type scenario. All right, so you see how the buyers are getting more aggressive as we get here. So if the sellers truly had control, that would have been a non-issue. That's why I'm running my stops so tight. I want out ASAP if the sellers don't get their act together. All right, 45.43. Come on, somebody take it. There we go. 42 3/4. I think I saw 42.5. There it is. All right, so now the next obstacle right here on this low, 45.41. After which we'll be at break even and the market will do what the market will do. Look at those buyers. Give it up, boys and girls. They're going to tag us. So this whole area that we're sitting at right now, 45.45, a couple ticks higher, a couple ticks lower, very important price level for the NQ. Keep that one in mind. 45.45. We might see this come into play again in a day or two. Yeah, the buyer's doing some serious defending of their positions here. Nope. Well, that's okay. That's okay. We managed that trade pretty well. Now I'll make a note in my journal and see whether I should have held my stop back a little bit if I got stopped prematurely, or in most cases, it works out to my benefit, taking that early hit. Oh, come on, you guys, don't make a liar out of me. Yeah, Jim says the YM's pretty choppy too. It is a chop fest this morning. I think the bias is down, but it's no fun trading this way. Trade Manager says we're in swing mode for almost a half an hour, after which we're moving into scalp mode. Oh, won't that be fun? More of the same. Not too much to choose from at the moment. For those of you who like movies, the opening scene for the movie Enemy at the Gates with Jude Law, where he's the Russian sniper, and his name popped out of my head right right now, but he's hunting with his grandfather, and his grandfather is pretty much telling him, to wait, to pick your moment before you fire your rifle. And no doubt it would have been because ammunition was a little bit more scarce back then than it is now. And all the rifles would have been bolt action anyway, so you would have you had to make that first shot count. But I find it a very good analogy for trading also. How you want to pick your moment. If the market's, not cooperating, if you're getting a lot of yellow bars, a lot of obvious sideways action, don't feel like you have to pick out a trade here. Bracket the range, however you identify it, and throw in a buy order above and below. John says, we learned that lesson at Parrish Island as well. Yeah, anybody who has ever had an occasion to have to shoot at anything aggressive like a wolf or a bear or a charging moose, you need to make that first shot count. Or you get good at running away. All right, so far it looks like it was a wise decision to take our hit early. We may have been tagged here on the ATR stop. Yeah, would have just been tagged on the ATR stop. Now we'll see whether holding above the swing high would have held us in, but right now it's looking like that was a good call. It was a good loss. Yes, there is such a thing as a good loss. And now they're challenging the swing high, or where we would have had our stop, and we would have been tagged there also. So yes, we can make a note in our trading journal that that was in fact the right thing to do. And just a quick review, because there's not much else going on at the moment. We chose to sell it here off this test of the extreme, the market reversal. I think our initial trade was set up something like this, more or less. Market headed lower, buyers came back. We looked for the sellers to show themselves, and which they did, and then we started getting more aggressive with our stops, and we got stopped out on the reversal somewhere around here. And you can see that worked out pretty well because we would have taken the full hit for whatever it was. So we ended up taking a $55 hit, probably $65 by the time your commissions and fees are added on, but still a far cry from a $300 loss. This is something that takes a little while to learn. I remember one of the early members in our DTS group had a difficult time with this. He would be holding on, and he would always, if the trade went sideways on him, he would end up taking the full hit. And if you're only risking 2% of your trading capital, it's not the end of the world. That's why you have your safety net. But it's unpleasant all the same. It's much better if you can take that $300 or $400 potential loss and whittle it down to a $50 or $60 loss. So pretty happy with how the market is responding so far today. Wow, and the NQ making another push. Jim says the NQ is the one lagging, which does not seem very NQ-ish. A lot of times the NASDAQ's out there in front, but we're challenging the top end of this trading range now, producing first micro-macro cross signals. Once again, though, you got to use the old noggin from time to time, too. Yes, first micro-macro cross. Yes, high probability signal. But if I give up 1, 2, 3 ticks, I can enter above the high. Regardless of where I choose to enter, I feel I would have to run a rather deep stop here because the market is potentially channeling, not so much for the test of the extreme. We've had the test of the extreme right here. But because we're moving sideways, we've done the little breakout bit. Now we're looking for the retest. Ideally, the retest will recover quickly. But if the market gets way, way, way deep into here, then this breakout is going to prove to be a false breakout. Right? So I want to, once again, give myself a little bit of staying power that if I am brought in, let's say the market ticks up here, brings me in, and then heads lower, I have some staying power so I can see where the buyers are going to step in, and then I can take my stop from down here and I can start to roll it and roll and roll and roll and roll. But in this instance, even though it is a first micro-macro cross, I would offer up a few extra ticks, make it take out the high, which it did not, so currently I would not be in the trade. Now we're in a macro pullback situation, which is again a test-retest type scenario. And here too, you want to give yourself some staying power. You want to hold the stop as deep as you can in case the market is not truly rallying. The advanced decline a little bit more positive. Jim says we've got almost 800 buyers, 2,000 sellers, which would make it about a positive 1,200. There we go. I was going to say, why did I not hit my limit order? It jumped right over my limit order. So we're currently at break even on the rest, and there we go. So managed to pick up a nice little trade there. Mark's quoting me the opening line from Enemy at the Gates, the movie. I don't know if you did that from memory or if you looked it up. That's pretty impressive. Or maybe he printed it off. Oh, Matthew says I cheated and looked it up. Thank goodness for Google. It's a good movie though, I have to say. I haven't seen it for a little while, but I like true stories. I like stories that have been made into movies. Some of them truly are stranger than fiction. All right. So the market's still indecisive. If we're trying to get a handle on who is in control, we just had a breakout. The buyers recovered, and the sellers squashed them again. Notice here on the Geiger counter, we've got a bullish island and a bearish island. That's a little odd. I'm not sure I've ever seen one like that, where the buyers and sellers balanced each other off perfectly. Sometimes when you get these little islands like this, one-sided, it will show you a buying trap or a selling trap. Right now it looks like the seller's becoming still more aggressive at these levels here, trying to defend this 45.57 area. Speaking of a larger test of the extreme though, this I would consider a larger test of the extreme. Like if we're looking for our day, our bias on the day, a failure here and a move lower would put a very bearish flavor on the day. At least back to this level here and perhaps even down to this level here. But not necessarily your higher probability trade. John's asking, how do you use the opening range for your trading from 9:30 to 10 Eastern? Well, this little tool here is actually courtesy of Jim. He's one of the room members here. And he's given me permission to hand it out. So if you would like a copy, please send me an email. And what he's doing is he's highlighting the first hour of trading, essentially the opening range. So this is the high and the low of the opening range. There's a school of thought that says that the big traders, the big money, the guys in the know, get their business done early. And therefore, the first half hour high and low tends to carry a significant amount of weight. Now, if I roll back here to yesterday's session, you can see that, okay, so the first hour printed here. This was the high of the first hour. This was the low. Market came down, did a little flinch. Very often it will come right down and hit the number. This yesterday came up a little bit short, but look at where it went. Went to the high of the day and flinched. I'll go back another day. All right, so this is where it printed. This is after the first half hour. The market retreated, came right back down here to the lows. So what Jim would be telling you is don't trust this sell signal because we're sitting here at the low. Sure enough, we got a little bit of a bounce. They made another shot at it. Look at this, another sell signal, a little bit of a bounce. They finally get through, and I think there was a retest somewhere along here. Here we go. We get the retest, so now we're respecting the level from the other side. I suppose you could have even caught this little bit here as a retest. I scrolled through it a little bit too quick, but there was a little retest right there. Here's the bigger retest. Stop it. And then the market tails off a little bit there. So it's kind of handy to know. And actually, Jim's trained me to be very conscious of the top of the hour as we're getting into the signal that may be producing at the top of the hour. When did this one print? This one printed at 10 to the hour. Okay, not close enough. But if this said 6:59 instead of 6:49, I might have thought twice about taking that signal. If it was a viable signal, I mean, knowing that we're almost at the top of the hour and that very often we do see prices retreat from the top of the hour. You've probably heard of the reversal times. The top of the hour of the first hour and the bottom of the first hour tend to be traditional reversal times. The 10:30 reversal, a lot of people will write about, and it is a phenomenon, but only if there's an existing trend. If you don't have an existing trend, then you don't need to worry so much about a 10:30 reversal. Like this morning, for instance, here we are at 10:34 Eastern right now. I don't think we're reversing from any trend. Here's the 10:30 mark right here. And let's go back to yesterday, because yesterday did have a good trend to it. And 10:30 is right there. So yesterday didn't have a reversal to it either. What about the day before? See, it's one of these things that works until it doesn't work. Oh, this one was textbook. So this one is going to show up in all the textbooks out there. There's 10:30, there's the reversal. But notice the difference between the day before and what we've been looking at the last couple days. This had a well-defined trend right through the whole morning, 10:30 mark, a little bit of profit taking. Yeah, that was textbook what you saw there. Well, you guys, I don't know what to tell you. We definitely have a market that's pinched. It is range bound, and with only 5 minutes left on our swing mode before we move into scalp mode, I'm not the least bit surprised. We have a well-defined range here and here, to a lesser extent here. And we may just end up waffling a little bit, testing the highs, testing the lows. Good thing we got busy early. Well, looks like our first micro-macro cross signal did work out here. This is the type of situation where you're going to have to look at the logistics of the trade. Yes, it's a high probability signal. Big question is, can I profit before I run into this chunk of support at the bottom? And once again, there's always the possibility you're going to see a macro pullback. I would say we did have the test of the extreme over here. And the subsequent failure. And we do have room to profit before we get even close to the support area. So that would be worth trying, and it did fall off rather nicely. Now we're testing the bottom end of this trading range. See what kind of support we get there. There should be some sort of reaction on the part of the buyers. Okay, I'm curious to see how long scalp mode is forecast for. We're just about to leave swing mode. I'm going to move here into scalp mode, and it's going to be for, drum roll please, boy, that's the longest minute ever. There we go. Oh, great. 80 minutes. Wow. Well, that's kind of what we've been seeing anyhow. And what the scalp mode is telling us, what the trade forecaster is telling us, is that not necessarily that the market won't make a big move, but rather that it's very likely we're going to see some choppiness, we're going to see some rather deep pullbacks. So we may have to run a deeper stop, perhaps consider going all in, all out on target. Just a little bit more unpredictability. John's asking, if we only have the Raptor, can we add the trade forecaster to it? Absolutely. All these tools, folks, that you see, you can use on any chart. And maybe what I should start doing is mixing them up a little bit, because people are going to start to think you can only use the Geiger counter on the Raptor, or you can only use the support and resistance lines on the Falcon, trade forecaster on the Eagle. No, that's not the case. I only allocated one per chart for clarity's sake. but you can, where'd you go, Trade Forecaster? You can add them all to your chart if you want. Like I say, I only do it for the sake of clarity. So you can have your Trade Forecaster, you can have your ultimate support and resistance lines, you can have your rangefinder, your Geiger counter, you can have everything on every screen. The reason I don't duplicate it is because the information is redundant. In other words, the Trade Forecaster is going to show me the same information here, whether it's on my Eagle or my Raptor or whatever. My Ultimate Support and Resistance Suite is going to show me the same lines. Excuse me. It will show me the same lines, whether it's on my Raptor or Hawk or Eagle or Falcon. The Geiger counter will give me the same information regardless. If I throw the Geiger counter here on my Falcon, you see it's exactly the same values. And same thing with the support and resistance suite. You see the numbers are identical. 45, 46 half, 45, 46 half for the primary support. So regarding your question, does it help? I think it's a helpful tool. You know, it's nice to know that, okay, we're in scalp mode. We might expect a little bit more violent moves in the signals that we're going to produce. Therefore, I'm probably going to go all in, all out. So if I normally have one contract with a 20 tick target and one contract as a runner, maybe I'll just go all in, all out on two. Right? I get the signal, wherever the signal might be, and I just take my profit when I have it. I'll perhaps go with a more conservative stop strategy, maybe the swing, maybe the chandelier. Maybe I'll use the ATR and dial it back a bit. You know, give myself a little bit more staying power. So these are all things that the Trade Forecaster can alert you to. But like I said, I only have it for clarity's sake, that I only put one tool per chart. With the Trade Forecaster, remember, very important to put the market open time relative to your computer's clock. Some people will adjust their computer clocks to be on Eastern time, and that's fine. Or Central time if you prefer to go off the Chicago markets. Oops, lost my Geiger counter. So you can see scalp mode holding true to form at the moment, getting a little bit bigger pullback. All right, well, they're not giving us a whole lot right now, but we'll see if anything else develops. Otherwise, we might button things up at the top of the hour. Yeah, they're just kind of happy to be hovering there. I think they're liking the prices they're at the moment. So not very much follow through. Oh, they are going to make another push lower. Uh, yeah, John says, get out of school early or we could watch a movie. Jim's asking, how did you determine with the trade forecaster that scalp mode was going to last for 80 minutes? You see up here, I don't know how well you can see it on your screen. It says scalp is suggested. So the scalp mode is the big long bar. And it said trend is suggested in approximately 67 minutes. So at the time it said 80 when it first flipped over. So for 13 minutes now we've been in scalp mode and the market's just kind of been floundering a little bit. Yeah, maybe they should have put scalp mode approximately 67 minutes, trend mode suggested next. We did get a hard edge bounce signal here on the Eagle. And we'll see. It may have some follow through to it yet, but you know, the obvious buying support right down here. And the lack of momentum really makes me wonder whether or not anything is going to happen this afternoon or later this morning. I think John's right. We might knock it off a little bit early today. And remember, tomorrow is Wednesday. We're going to be meeting in the public trading room, in the open house room. All right, you guys, if you're trading this afternoon, oh man, I don't know what to tell you because we are still stuck within the early range, right? Here's the high of the morning, here's the low of the morning. I think until we get outside of that range, we might not really see a trend. I was going to say I would give the nod to the sellers. Yeah, okay, I'll go out on a limb. I'll give the nod to the bears today. So if you're going to be trading the rest of the day, look for selling opportunities. And a nice way to finish here, John just bagged another 20 ticks off of the Ricardo hard edge bounce. Way to go, John. Okay, you guys, we'll catch you tomorrow morning. Talk to you then. Bye for now.